So one of you guys is asking, how do you build a watch list? Now, a watch list, okay, is basically something that you put on your site, right? So that you know what are the potential tickers you want to trade. Okay, if you do not have a watch list, right? Let's just say, for example, I don't have a watch list, okay? I'll have like that. All right, I'll just have this. Okay, I don't have a watch list, okay? I wouldn't know what tickers to trade, and right? I wouldn't know what tickers I'm going to be looking at to trade, right? Because and I would you see, I just have nothing to look at, right? But a watch list, okay, helps you to kind of identify what tickers are worth watching. But not only that, right? A watch list helps you to identify which tickers are doing good and which tickers are not doing good. So you can focus on the ones that's doing good and avoid the one that isn't doing good, right? In a sense, it helps you look at volume rotation as well. You can see, when the price moves up over here, or the price moves up over here, the price moves down over here, and stuff like that, right? Or you open multiple charts if you can, right? It helps you to kind of identify where the volume is going, where the volume is flowing out, where the volume is flowing in, right? And watch this help you to identify all that. Because if you have a blank watch list here, okay, you're not gonna understand anything, right? So when it comes down to it, okay, when it comes down to it, um, having a watch list is very important, at least in helping you identify what stocks to trade. Now, how do you build a watch list? Okay, so for me, when I look at my 4 a.m. movers, all right, okay, now just you guys gotta write this down, whatever the case is. Okay, when I look at my 4 a.m. movers, my watch list is being built on my previous day after hours action. Okay, right. So when I build my watch list, it's built on my previous day after hours action. That's number one. Number two, um, the 4 a.m. watch list, which is built on the previous day after our action, all right, will change on the day, right, based on any action I see at 4 a.m. Okay, so if we look at the 4 a.m. Let me see. All right. If we look at 4 a.m. watch list, okay, right, for the 4 a.m. watch list, right, for the 4 a.m. watch list, um this is based on my previous day, my previous day action. All right, previous day action, okay? Previous day after hours action. Sort of. All right. And then this watch list is going to change, right? The 4M watch list is going to change. The watch list has to change as the day goes along, right? It's gonna change based on what happens at 4 a.m. Because 4 a.m. sometimes we may get new stocks running, right? That we have to add to the watch list and see what's up. Okay, and at 7 o'clock, right? That's where I start to build my watch list again. Change it, I would say added it, right? Based on what pops up at 7, what has good volume or whatnot, what has good catalyst and stuff, and what is not holding up at 4 a.m. and completely died off, I remove them. So I add on new tickers. I'll remove tickers off from the 4 a.m. sell off, right? I'll add in new tickers that show strength at 7 o'clock. And then I'll continuously do this until market opens up. And that's where I will have a more defined watch list for the day, right? And then we'll trade we'll trade during the day itself, right? And then if let's say all the tickers on the watch list there's nothing really moving on the 4 a.m. watch list that you have, or on the watch list that you have curated for the entire pre-market session, then you look for intraday volume scanners to kind of add to your watch list, right? Last week, UPXI was not part of my watch list at all, but because of this action happening in market open, right? You can see that, okay? I have to, right? I have to add this into my watch list. And then I told you guys, right? Accumulate all the 15s and 16s, have your stop loss on the $15, and we hit 15.10, went up $22. So it's your watch list has to continuously change throughout the day, right? Now, but what tickers do I put on the watch list? Now that depends, right? It really depends on what kind of trading style you do. Okay, obviously, if you're going for more of a slower, less volatile ticker to trade, then you would not be putting tickers like UPXI or high momentum volume tickers on your watch list. But for me, I focus on high volume setups, abnormal volume, right? Good catalyst, right? But mainly high volume setups with good range of action and good historical movements as well. If it all aligns on the day itself, I'll put it on the watch list. Yeah. But it changes, guys. All right. It changes throughout the day. It's not going to stay stagnant. All right. I need help with the language. For example, when it says if it doesn't hold, don't enter, or when Frankie says if it depends on volume for newbies, where do we see the volume? How can we tell if a stock has volume or not? Um, so for this one, I can't really help you with it. I don't understand what does. Sometimes Frankie might mean another way on when he says that, right? Because when I say it might mean different. Okay, so when you say it depends on volume, it really just means whether, like for example, if volume comes in like that, right? You can see if volume comes in, right, the price goes up, right? So it depends. Like if he says it depends on volume, I'm pretty sure that's what he meant, right? Whether there's volume coming up, okay, it depends on it whether it goes up or not. Now, that could be what he meant. Again, this is his words. I do not know what he actually mean when he says that, right? So you have to ask him that. When it doesn't hold, don't enter. Could be, for example, if let's say a stock, right, has this very clean support level over here. Okay, let's say if a stock has a very clean support level over here. Okay, right? And it kind of just does this and stuff like that. Okay, right? Kind of just does this. So when I say, oh, when Frankie says it has to hold 1785 for a move up, you want to see this hold, right? If it doesn't hold, then don't enter it, right? But if you see it holding and curling up and stuff like that, you can take your entries and have your stop loss under 1785. At least that's what I would mean when I say it. Yeah. Can you explain what Lotto means when alerting? And so how much of your account is recommended for each trade? Okay. Sorry, hold on 1 second. I have this. Oh, wait. There is one question from this guy earlier. It's on the left. Where'd you go? Oh, all right. One question from this guy, and then he just kind of dipped. This is interesting as well. Okay, that's strange. Can you explain what Lalo means when alerting? Also, how much of your account is recommended for each trade? Now, again, right, when I say Lados, right, my definition of Lados might be different from Frankie's definition of Lados. Okay, so I'm gonna explain it on what I mean. Okay, so when I say Lados, it means that you're putting in the amount that you're willing to lose. So let's say, for example, all right, if okay, if I tell you guys and took AA at $17, stop loss under $15. Okay, let's say like that. And then I'll say like, lotto size or something. What this means that is that if I've determined, all right, if I've determined to kind of put my loss at $200 for this trade. So for me, I'm okay with $200 loss, right? To me, lotto size means that I'm okay losing $200. Some of you guys, lotto size might be $50. Some of you guys, lotto size might be $100. Okay, lotto size just basically means putting in an amount that you're willing to lose, right? If you treat it like a lottery ticket. Now, let me ask you guys this: when you guys buy lottery tickets, do you expect to get your money back? No, but you're willing to pay for it, even though you know that you're not going to get your money back, right? Same concept over here. Okay, if you have a lotto position, right, you should expect the moment you enter a trade there, you treat it like the money you put inside is already gone. Or rather, if it hits stop loss in that sense, right? So that means that if I say lotto size, it doesn't mean that your stop loss is under $0, okay? Right? It means that if let's say my lotto size loss is equals to $100, right? So that means that I don't mind losing 100, right? For me, I can throw $100 inside and then just kind of play around with it and stuff like that, right? So I don't really mind. So that means that if I enter this trade over here, okay, if this trade doesn't work out, I will lose $100. So that means how many shares can I buy over here? Right? It means that I can buy 50 shares. Right? Because if I buy 50 shares at $17 and it hits 15, how much do I lose? I lose $2 a share, right? And if I have 50 shares, I'll lose $100. And that respects my lot size trading plan, right? That's what it means. Okay. I do not allocate how much of my account is for each trade, right? I told you guys this before. When you want to size in on the trade, you size in on the fact that you size in on the fact that you are willing to lose on the trade. So for example, if I'm willing to lose, like I said earlier just now, right? If I'm willing to lose $100 on this trade, okay, that means that I can only afford to buy 50 shares over here. Now, 50 shares on this is equivalent to spending $850 on this account on this trade over here. So you see, I do not care how much I'm willing to put in, but so long as it respects my loss, if it doesn't work out, I put in that amount. It doesn't matter how much of my account are being used over here. Right? I'm sizing in, right? I'm managing my plan based on how much I'm willing to lose. So that this way, I will never blow up my account because I'm in control of my losses. For those of you guys who are new to trading, you guys don't ever think about this, right? What you guys do is that you guys just buy in based on based on how much you feel like you want to put in the stock. And if it doesn't work out, right, you're not prepared to take the loss, or you're not prepared to see that amount of loss. But for me, whenever I enter a trade, okay, right, whenever I enter a trade, I already know how much I'm willing to lose, right? And if it doesn't work out, it's within expectations. So I'm not sad, not nothing. All right, so I can just cut it and move on to the next play. So this is what lot size means. Now remember, lot size is generally equals to an amount you're willing to lose, right? An amount that when you open a trade, you treat it like the money's already gone. So let's just say, for example, and it doesn't have to be small, right? If let's say I had a great week, right? Let's say, this week I've made around $20,000. My lot size could be $2,000. My lot size can be $3,000. My lot size can even be $10,000. If I'm willing to risk 50% of the profits for the week on the play, it could be. Because I know that if it doesn't work out, I lose 10,000. It's something that I'm okay with. So it could be that. Right? So it has to be an amount that you're willing to lose. Okay, I know, saying that it's the amount you're willing to lose is like a little, it's hard to say because obviously none of us over here want to lose money, right? But losing is a part of trading. So if you can't accept losses, like I said before, you should not be in the stock market at all. Because again, even Warren Buffett, an investor, all right, also loses money in the market. We're not going to be anything special. Okay, so but this is what lot size means. It doesn't have to be small, right? Especially if you had a great week, you're willing to risk more, right? Sure, your lot size can be bigger, but you have to understand that when you put your money inside, treat it like the money is already gone, and size in accordingly for it. So again, if your lot size, or rather, you're willing to lose $200 on the trade, right? So how many shares can you buy right now? 100 shares. Because if you have 100 shares at $17, if it hits 15, you're losing $2 a share. You have 100 shares, it goes to $200. It's your lot size position loss. You're okay with it. It's something that you already know. Right? It's something that you already know. Yeah, so this applies. So you see the concept over here stays the same, right? It applies to even if you are treating it like a normal trade, right? Let's say for a normal trade, right? For a normal trade, you are looking at maybe 500 loss each trade, right? You're okay to risk $500 on each trade. Okay, for example, you're willing to risk $500 on each trade. So when you take this, when you take this play over here, okay, you already know how much you are willing to, how much you can, how many shares you can buy, so that if it doesn't work out, you only lose $500, which is perfectly part of your plan, right? So when you size it, when you guys size it based on how much you're willing to lose, you will never, um, well, lose money, right? You will never lose money. Or rather, it's not never lose money, but you will never be shocked, right? You'll never blow up your account because it's all your choice, right? If you tell me that your choice is to risk your entire portfolio on this play, then I mean that's your decision. Okay. How impactful are warrants? I don't really care about that, right? I think warrants, dilution risk and all that bullshit. I mean, it's good to think about them, but I don't really care too much about them at all, right? I don't care about them too much about them at all. Okay, yeah. So there is that, right? It's just the sizing part that is something that is very important. I think for beginners, what's important is to understand the basics, ask questions. Okay. The good thing about being in a community like this, when I'm trying to host these sessions for you guys over here, is so that when you guys have any sort of questions, you guys can ask me and I can answer you guys, right? When you look for information on YouTube, online stuff, you're not gonna be able to kind of understand. Or let's say if you have questions, who are you gonna ask? The person inside the video, and this guy's not gonna fucking reply, right? But over here, when you guys have questions, you guys can ask, right? You guys get those doubts, settled immediately, right? And then you can move on to new questions and stuff, right? Back test your strategy. And obviously have an open mind to learning. Very important as new beginner traders. Because there are a lot of things that you guys would not know unless you guys have experienced yourself in the market, or unless you have someone experienced telling you guys that this is how it actually works. What do you think is so Mina? That's the thing, right? What is more important to know is really there is no one thing that's most important to know. But I would say that you got to make sure that you have the right structure, right mindset, right structure, right setup, right, having a good broker. Don't tell me you're trying to day trade when you're busy with a day job, you have meetings and stuff, right? It's obviously not going to work. You're trying to get oranges from an apple tree. It's not going to work, right? So you got to understand that and don't try to force it, because when you try to force it, which I'm already telling you guys it's not going to work, and if it doesn't work out, you start being upset with yourself. I mean, you inflicted this on yourself. You already know it's not going to work. You try to make it work even though it's not going to work, and when you don't work, you get upset. That's just strange, right? So you gotta understand like the restrictions and what you need to do, okay, and accept it, right? Before you start to really put yourself with unrealistic expectations onto trading. I see a lot of you guys a lot of the guys I talk to, right, saying that they are sad that they're not making money this month. I asked them how long you have been trading. They just started trading this week, or sorry, they just started trading this month. I'm like, what? Your priority when you first start trading is not to make money, is to learn how to do it right so that the money will come. I always tell you guys, right? Process over profits. Okay, if you think that you're gonna make money just on the first month you guys start trading, okay, I mean it's not going to happen, right? When you have unrealistic expectations, and obviously when those expectations are not met, you're gonna be very disappointed with yourself, right? But in the first place, you put yourself in such an impossible situation. And obviously, you're going to be upset with yourself, disappointed with yourself. But why? Right? It's not, I mean, you don't have to put yourself through that, right? You got to be more realistic with, the targets and the goals and all that. Okay, what are better to use, EMA or MA? I've never used MAs before, so I can't really say for that. There is, by the way, guys, there is no such thing as what is better than this or that, right? Just because someone is using Fibonacci, I'm not gonna say that, oh, Fibonacci is not good. Okay, it's just what is consistent to you and what you can, consistently make work. I think that's what matters, right? You want to be able to consistently make something work, right? You don't want to be um how am I supposed to put this? You don't want to be in a situation where someone's telling you, oh, EMAs are good, EMAs are good, but it doesn't really fit your style, right? And then you end up trying to force to make it work when it doesn't work for you. Obviously, I'm going to tell you that EMA doesn't work for you. But it all boils down to what works for you and what you can stay consistent with. Right? If you prefer using MAs, or if you feel like using MAs gives you much better results than EMAs, then obviously MA is much better for you. But in the general sense of things, right, indicator wise, there is no such thing as this is better than this, right? It's how you apply it and how consistent it is to you. You always mention setup. Can you explain more how to identify if a particular ticker has a good setup? Now, this is again very aligned with what your trading strategy is, right? For me, if let's say a ticker kind of goes up like that, okay, and it comes down, this is not a good setup at all because there is no structure, there is no range. It's not like it's doing this, right? If it kind of does this and stuff, okay, right, there is at least some kind of structure for me to play off, right? Kind of like maybe a flag pattern and all that, right? But when the ticker just does this, there is no structure for me, right? So in a sense, this is something that that doesn't really have good structure, and this one might have a good structure. So this one have a good setup. This one doesn't have a good setup, right? Obviously, it's very much aligned to whether the ticker has catalyst. Is the catalyst good? Is it fitting the theme of the market? Is there volume over there? There are multiple factors to think about when the ticker has a good setup. I can't really just kind of identify or tell you guys, oh, this thing is good, or how just because so just because you see the technical analysis looks good doesn't mean that it's going to be good. You have to factor in things like volume rotation, which at the end of the day is going to be like, oh, you know what? This thing has a good structure. Volume is flowing to this while the other ticker that's dying. So this is a good setup that we want to look out for a potential reversal move. It's not just one thing. Okay. Right. And it has to align with what you are looking for when you trade as well. Okay. Because what a good setup for me might not be a good setup for Frankie. Because we are both very different traders. I play breakouts. I play dips sometimes. I play breakouts as well. But Frankie doesn't really play breakouts. He plays mostly dips. So for me, a breakout is a good setup, but might not be for him, right? Because we have different ways of doing things. Like one example is going to be SXTC, right? On Friday, what did I say? On Friday, I told you guys to watch the 290 breakout, right? For SXTC. Yeah? 290 breakout, right? Did we break out from it? We didn't. Right? We did not break out from this at all. See that? We did not break up from this at all. So if we break up from this, it's going to be a good setup. But because we didn't break up from it, right, then it's not a good setup. So we don't want to touch it. How do you find price targets and key levels to break? Just on the daily chart or on the weekly chart, or sometimes even on the 4 hour, right? You look for potential levels on the weekly, okay, high areas of price rejection or price action separation, all right, and then mark those levels down, align it with whatever works on the 4 hour chart or whatever the case is. For example, right here, I could even say, okay, you know what? The 4 hour has a 200 EMA. You can see that, right? Where price most likely rejects all the time. So this 200 EMA over here, this red line, is going to be a strong resistance level for me. All right, and this level is 269, right? So for me, I'm just going to say 270. All right, I round it off. Okay. So when I take this trade over here, I can look for a 270 breakout to trade. All right. Obviously I have 290 as well after that. So I have to understand when I take this trade, my first level is going to be around 290 level. I cannot expect this to go to like 4 plus when I can't even clear 290 because that's a big level for me on the weekly chart. Okay. Right. So you have to understand that when you have those levels down and you understand that, you know that you're not going to, when you go inside a play, you're not going to be having, again, unrealistic expectations and end up not taking profits when you should have. Because if we look at how this thing acts on the 1 minute after, you can see that once you broke that 270 level, right? We had a scalp to 290s, but we couldn't break up for 290s for more, right? And it went down. On CPI this week, your wording on it seemed to express a great deal of confidence. Wait, what? CPI? What's CPI? I don't. What do you mean on CPI this week? Your wording on it seems to express a great deal of confidence. It was a great call. Is there a way you could hit those you feel really confident about more often? What do you mean by CPI? Like consumer price index? I don't do options. Uh, can you show us again where's the best way to get in on a play and what you watch for, like volume or RSI or EMA? I do not use RSI. EMAs, I use it more of a trend, right? And then volume is really the one thing that I mainly focus on to make sure if the ticker is good or not. Um, there's no best way. Again, there is no best way. Okay. It's because again, you see, for me, I take losses too. There are some trades that just don't work out for me, right? But I am very quick at cutting them. I'm not gonna hold on to them and stuff like that. Sometimes I even cut them earlier than the stop loss so that my losses are minimized. And that is the way you should do to manage trading, right? That is how you should do to manage trading, to manage your losses, so that your losses can be kept contained, right? Smaller than expected. And then your winners, I'm not gonna be taking everything out just because it pops. I'm gonna let it ride. And then some plays, some plays go crazy, right? So there is that. There is no best way. Okay. If you want me to show you guys how to do things or whatever and stuff like that, you gotta come by the 4 p.m. EOD review where I explain to you guys why I take this and that, right? Because those are real life actual situations is why I'm doing that. You tell me if you're asking me to kind of put out one right now, I can't really think about one, right? It's not fresh for me. And again, those sessions are recorded and uploaded inside here. So you really have no excuse to not go through them at all, even if you can't make it. At the end of the day, most trading based on the statistics we need to avoid. I'll tell you guys, okay, so the the daily poll 50-50. I'm not sure if that's what you're talking about. More losing than gaining. Um, I would say one of the mistakes that most beginners have is really just the execution, right? Because look, I spoke to someone over the weekends, okay, and last week I gave you guys this play UPXI, right? I gave you guys this play UPXI, right? Okay, and I told you guys accumulating 16xx stop loss on the $15. You guys can see it, okay? Right, and then after that, I even told you guys play around dips so long as $15 hold. So you see, the plan has already been given, right? And then UPXI went from here 16xx all the way down to 1510. You can see that, right? Went all the way down to 1510, okay, before bouncing up to $22. Now, did we lose $15 over here? No. So the play never lost. But there was this one person I spoke to, got in at 17.0 something and closed out at 15.30. Why? And because of that, the person's red, right? But what was my plan? It stopped on the 15. So why would you cut at 15.30? There are a lot of people over here that do not listen to alerts, do not respect the plan, and just be trading whatever you feel like or whatever your emotions is telling you to do so. And that's why you guys are being, that's why some of you guys over here are red, right? The execution is flawed. You guys are not listening to the plan or whatever. You guys are trading whatever you feel like. I feel like, oh my God, this is dropping. I'm taking too much of loss. Let me cut it right now. Even though I specifically say stop loss in 15, but the person is close at 15:30. I don't know why. Because the person is not maybe not listening to the plan, trading the emotions, right? I think that's something that a lot of beginner traders do, right? Do you guys just trade purely on your emotions? You guys don't really care too much about structure or anything like that. And this is one of the main mistakes that new traders do. So maybe that's why, right? Maybe that's why a lot of these people are losing more than gaining because they're not listening. And risk management as well, probably so. And these are really the main two things, right? Trading on emotions, one of the biggest mistakes newbies make because you guys are being driven by emotions. Okay. Do you play the breakout or the retest of breakout? I play the breakout. Just play the breakout. If I say I break out something, I'll wait for it to break out first, and then once we have a confirmation on next candle, I'll take my entries over there. Oliver, I've mentioned this inside the onboarding channel. If you went through everything inside, this is something that I've explained before, right? So you can see that trading rules, how to read my alerts, blah blah blah. All right, how to read and understand breakout alerts. So over here, right, it's a video. I don't wait for the retest because sometimes there is no retest. It breaks out and it just go. Are the stops you give on alerts hard stops usually or no? All right, all my stops are mental. All right, all my stops are mental, right? And all my stop loss are mental. Unless I say that I am setting a stop loss, right? It's all mental stop loss. I'll let you guys know if I'm out. But sometimes I may kind of forget about it, okay? Because I am alerting multiple trades for you guys and trying to manage my own trades as well. So, but those trades where I don't really update too much about it is because we are very nicely green on them. I don't expect you guys to turn it red so you guys can close it off yourself. Oh, CEP. No, CEP for me, I mean, it was I wouldn't say it was high confidence, right? But it was something that had potential. Now obviously, guys, every single play that I take, right, is there's potential. I wouldn't take something that doesn't have potential, you know, right? But there are some plays where I tell you guys lottos, some plays I tell you guys small, some plays I tell you guys play around dips, right? It's all there. Yeah. Stop loss on the 15 just basically means that we want to see the price kind of see if it holds 15. If it doesn't hold 15, or let's say the sell off is getting a little bit too hard, I may just close it off quickly. Or I may even just close it off earlier. Right? If we take a look at Kit on Friday, right? I was in at 133, okay, for Kit. And then for me, this is getting a little bit slow. Okay. Now look, at 941, I was in at over here. All right. I was in at Kit 133. It popped up to 139. Obviously, I'm not going to take profits on small moves like that. But when I saw a candle reject like that, I mean, I'm not a huge fan of it anymore. Right. And then when I start to see this, start to not even do much of anything, I closed it off earlier before we get the flush to 116. Right. So it really is very situational. Obviously, the comfortable when I see stop loss on the 15, I don't tell you guys to have to close out at $14 unless of course there's a knife or whatever the case is, right? But generally $14.90 or the moment you lose $15, that's where I'll be ready to cut. If we miss the entry price, should we wait for the retest or just buy higher than the suggested entry? If you guys miss the entry price by a bit, it's fine. But if you guys miss the entry price by a lot, I would say don't chase it at all. Right? Some plays you can wait for retest, okay, but you gotta understand to manage your own trades after. Because whenever I alert something, I'm alerting on strength, right? Sometimes when price retest the level, right, it's actually on the pullback, right? It might not hold and it might actually break down. So you want to be a little bit more careful. Okay, I would say try to stay close to it. You can buy higher than the suggested price, guys. Look, there is no way in hell when we're trading low floaters, when there's so many people inside the room and you guys are buying off my alerts, right? The price is going to artificially jack up a little bit. But I'm not. I never sell into the candle alert, right? Because that would be me selling to you guys, and I don't want to do that. And plus, again, I'm not looking for small moves, right? Most of the trades that I do are organic trades, so I'm looking for a very nice move to the upside. So, or an organic move to the upside, right? And if it's not too far off, it's fine, right? Obviously, when I alert, I'm in at 2.1, and you see at 2.15, 2.16, that's still okay to add. But don't tell me you're gonna add this at 230 when I'm in at 2.1. That's a little bit too far. Your stop loss still has to respect the same plan as I have. Sometimes you might get better entries than me. Sometimes you might get a little bit heavier entries than me. It's we can't have an exact 100% entry, because if everyone's buying it at that price, right? Who is selling to you? There's only a handful of people selling to you at 220, right? If I buy all the 220 shares, then the next person that's going to sell you at 221. You understand what I mean? Right? And we're not just talking about like one person, one share. Some of you guys might even buy like 50,000 shares. So it's very difficult to have everyone at the same price. But remember, I'm not buying at 220 and selling at 225. No. All right, I'm minimally going to sell it at 235, 240. Right, and we'll see what's up. Someone of you guys over here asked a question. It's just gonna disappear. It's kind of strange. What the hell? Okay. Most of the time we get a clear out and a fail breakout. What do you mean by that, Oliver? What do you mean by most of the time we get a no, I don't use hotkeys. What do you mean by most of the time we get a clear out and a fail breakout? That's not true. I don't use MACD. I don't know how to tell you guys that, but I don't use MACD. I think this is bullshit. At least for me. I think it's good to start MACD as a foundation for your trades to kind of get you guys used to the charts. But I do not use MACD. I think it's a waste of information. Yeah, but where where did give me an example, right? You say most of the time we get a clear out and then a fail breakout. You got to give me an example, because UPXI went pretty nice. I know you gotta have an example. It's very situational too. Okay, it's very situational too. Right over here, you can see we didn't even have a breakout over here. Right, we hit resistance and went down and stuff like that. Right, so you gotta have it. It doesn't mean that breakouts are most of the time we get a clear out and then a full breakout. No, it doesn't mean that. If it happens, if it doesn't work out, it just doesn't work out. That's just how it is. Now, I wouldn't wait too long, right? The moment, because the thing is, you have to understand that when a price is a support level, okay, like holding it multiple times, okay, when this thing lets go, sometimes the flush will just come very quickly. So I wouldn't wait too long. Just imagine this, right? If you guys are, I don't know how to put it so that you guys can understand, okay? But just imagine you guys holding in your P. The longer you hold in your P, when you finally let go, is everything just gonna like come out, right? Same thing, right? The longer the support holds on, when it lets go, sometimes you might just get a massive flush. Yeah, I use VWAP. VWAP is my white line over here. VWAP is one of the important indicators I use. All right, over here. This white line is my VWAP. Very important VWAP. It's a very important indicator for me. It's basically whenever price is above VWAP, I like it. When price is below VWAP, right, then VWAP is gonna be my first big level to clear before we see more. If not, it's just gonna be resistance. Like you can see right here, right? Resistance before it breaks out and might actually make a move. Generally, mostly if price is under VWAP, right, I would look for VWAP first. That would be my first level. So in this sense, you also know that if VWAP is the first level, you don't be adding at fucking 180. You know what I mean? Because if this is the first level, then you're only like what, taking a 3 cents reward? I mean, that's just fucking stupid. You can't assume that's gonna break out too, right? I told you guys before, never anticipate, never assume. Yeah. So at least generally speaking, that's just how I see it. No, that's why, right? Oliver, that's why my breakouts, you have to wait for confirmation, which is the candle closing above the level. You don't want to take wicks. Look, when I say SXTC 190 break or 290 break, is this a breakout to you? In my book, it's not. Based on how I explain my breakouts, it's not. This is not a breakout at all. This is a liquidity grab, a buy side liquidity grab, right? Did we break out? We didn't. Based on my book, this is not a 290 break, never happened. Some people might be, oh, price is above 290 means it broke. No, but how I explain it, how I made the video about it, right, in the onboarding channel as well, you should know that this is not a breakout. Okay. All right. Okay. So I think that's pretty much it. I'll see you guys around. Enjoy the rest of the weekends, guys. Okay, let's see what happens next week. I would say that I love